Hello, can you guys hear me? Mr. Brandon, are you on the line?
Yeah, can you hear me?
Yeah, James here. I can hear you. Yeah.
Okay, good.
So later I will click this make another attendees to the presenter, then I will share your slides. Right?
Share my
Okay.
slide. No, I think I can have my slides from my side. I use
Yes,
my
yes,
side
correct,
here.
correct. Yeah,
All right,
you can do also. Yeah,
all right.
all right. So after me, then you just switch for on self.
Okay,
Yeah, okay. Yeah. So I will start at 7:30. So have a brief introduction first.
no problem.
Okay, thank you. All right. Good evening again. So welcome to Phillip Futures webinar. I will be the MC and James. So our today's topic is plan the trade and trader plans for micro E-mini index futures and also gold futures. So before we start our today's main sessions, I will be the one who present about our company background. Okay, so I believe everyone got know about our risk disclaimer. So everything and the information that we share over here for these seminars is about uh, sharing informations and also sharing about the knowledge. So we are not here to recommend you to buy any products, buy or long strategy. Okay, so we are not here to ask you must buy here and buy this product or that product. Okay, so Phillip Futures was wholly owned subsidiaries of Phillip Capital Holdings Sdn Bhd, and we incorporated on 7th of October 1995. So in Malaysia, we do have 5 branches and 1 HQ. So we do have Phillip Futures branch in Penang, Kota Damansara, Malacca, JB, and Kuching. And we do have one new branch in Cebu as well. And our HQ was in Yap Wan Seng, KL. So Phillip Futures is a trading participants of Bursa Malaysia Derivative Berhad, and we also the clearing participants of Bursa Malaysia Derivative Clearing Berhad, and we are the holder of CMSL. Our company provide the first broker who provide an online trading platforms for both local and foreign product, and we are one of the preferred choices of professional traders in Malaysia. So as you can see, this is the global network which covered by Phillip Futures. So you can not only find Phillip Futures in those big nations like US, UK, Hong Kong, Japan, China. So as you can see, Phillip Futures was also in Turkey, India, and Dubai. Okay, this is the global coverage by our company, Phillip Futures. So as you can see, we can trade the product in US exchanges like CME Group, okay, CBOT, COMEX, IMEX, okay, and we got exchanges for Japan like JPX.com and so on. And Phillip Futures provide one-stop solutions for your business. Okay, now I'd like to introduce some of the product which are available by our company. So there are 5 types of futures product. We do have index futures. So like I believe some of you are very familiar on like Dow Jones, S&P 500, okay, FLI. These are in the index futures category. And for energy futures, we got like crude oil. Okay. So for agricultural futures, we do have like soybean oil, crude palm oil, and also metal futures we got gold, silver, copper, okay, and also we provide interest rate futures as well. Okay, so some of the reason that why you should choose Phillip Futures. So we will provide advisory service to our clients. So like if you want to know more about what is futures market and how to like start your future trading, yeah, we are very welcome that you can come to our office as walk-in, but now it's MCO, right? So you can call in or email us your inquiries. And we will provide the market analyst, so and also latest market news. So every day we will send some trading call and to our clients, okay. And we do provide the 24 hours working and execution support. So this for this 24 hours working support, I think is quite very important things that you can because like let's say today's your laptop is spoiled already, you cannot connect to internet, okay, something like this. So our leading desk is always backup you. Okay, so we do provide a free one-to-one coaching session. So like what I mentioned just now, you can have some if you want to know more about futures product knowledge, so you can call us. So if you let's say you are very new to futures, you open an account but you do not know how to use our platform, you can call us as well. So we can provide you one-to-one coaching sessions. Okay, and also from the education wise, we will provide free seminars and webinar for every month. We will at least have one event for our clients. Okay, and for accompanying, we are free of charges. Okay, these 3 are our upcoming event in April. So next Tuesday, 7th of April, actually from 7 to 8, we got another webinar. The topic is regarding to crude oil. So for 29th of April, which is Wednesday, yeah, same 7 to 8, which is a webinar. So the topic is regarding to the microeconomic trends and the impacts on gold. The last event for this April is 30th of April. So same time, 7 to 8. And this topic is trading strategy for a bear market. And for more information, you want to know about our events, our upcoming seminars or webinar, okay, you can go to our website and you can search from education sessions and find the seminars. Right. So the following slide is introduce our platform and infrastructure. Okay, this is one of our platform, Phillip Nova, and currently the Phillip Nova are now available on desktop and mobile version. So you are not only can trade through PC, you can trade it from your mobile as well. So for mobile versions, both desktop and mobile version are web-based. Okay, so they are very user-friendly and very stable, and you can customize your platform by oneself. Okay, so for desktop version, it's likely same with Phillip Nova. It's very easy to use. Okay, so as I mentioned just now, it's web-based. It has HTML5, so you can browse it with your web browser. Okay, this is a new features that we insert in our Innova, which is charting and market news. So you can, if you are our clients, you will get this platform to trade. Then you can explore yourself, or you can ask our dealer if you are not very sure about it. So now we are not only provide you the price for buy or sell only. We are provided charting and also market news. Okay, so this is our ongoing promotions, and this promotion, the product include is 4 E-mini futures index and also 1 mini gold. Okay, so to know more about our promotions, you can go to our website and search about it and know about that PNC. For information, this promotion actually will end on this month, 30th of April. So to grab this opportunity, trade at USD 1.8. It's very low commissions. Okay, so I briefly introduce about the CME micro E-mini contracts lah. Also, our today's speaker, Mr. Brandon, will also talk about these 5 products. Okay, so for micro E-mini indexes, we got 4: Dow Jones, Nasdaq 100, S&P 500, and Russell 2K. And the 1 E-micro is gold. Okay, so we total have 5 E-mini contract, micro E-mini contract. Okay, these are the advantages for trading E-mini contract from CME exchange. Okay, as you can see, the small margin, like the first one, right? Okay, we do have Facebook page as well, so you can go to Facebook and type Phillip Futures Sdn Bhd. Okay, can give us a like, and actually we will share our market news, we update market news, our promotions, and some of the announcement from Bursa Malaysia derivative, okay, on our Facebook page. So we will keep our clients keep on track on the futures market lah. Okay, we got YouTube page as well, so can go to YouTube page and subscribe our YouTube channel. Okay, other than that, for the social media, we do have Telegram as well. So we will always update our daily market news and also statistics on it. Okay, so do subscribe us, follow us. Okay, yeah. So today's speaker, I will do introductions for him. So our today's speaker is Brandon Chia. So Mr. Brandon actually is the trading manager from Bell Group. So currently, Mr. Brandon manages the company's proprietary trading and hedging desk. Okay, and the portfolio strategies include relative value and directional trading, fundamental analysis, TA on price actions, and so on. And Mr. Brandon worked as derivatives commodity trader for a family office in Singapore, where Mr. Brandon co-managed a diversified commodity portfolio. Basically, it's are on agriculture, energy, industrial, and precious metal commodities. So for 9 years, Mr. Brandon specialized on trading strategies, include both hedging and speculative opportunity for FCPO, coupon buy futures. And other products that Mr. Brandon is well versed include CME, CBOT, and Topcom commodities like rubber, crude oil, gold, and agriculture futures such as soybean and soybean oil. Okay, so before we pass the mic to Mr. Brandon, if you've got any questions regarding to future trading, you may go to our social media like website, Facebook to find us, and also you can take a picture about this slide to contact our HQ or other branches. So if you feel like you don't want to call us, then you can choose to email us. Yeah, also we will try to reply you. Right, that's all for introduction parts. So now I'll pass the mic to Mr. Brandon.
Hi, good evening, everyone. Okay, let me. Okay, give me. Okay, is it okay if I use this way? So okay. Good evening, everyone. My name is Brandon. Thanks for attending this webinar. Okay, so I'll be talking about plan the trade and trade the plan. All right, with CME, micro, E-minis indexes, futures, and gold futures. Okay. Okay. A bit of my background. Okay. Currently, I'm managing my company's prop book and the hedging desk. So what I do is I was given a fund from my company. So with the fund, I need to manage the positions to take risks. All right. So most of the time, most of my positions is in soybean and palm oil. But since Semi launched this micro E-mini, I've been trading it for I think 4 months already. So basically, sometimes most of the position I have in CME now is micro S&P 500 and gold. So it's quite relevant on this topic. So I hope I can share some of my experience, some of the tools that I use, so you guys can reflect on and try to use it if you guys want to. So what I'm doing today is I'm going to share as much as I can to you guys, and you guys absorb as much as you can. And I did webinar before. All right. In the last webinar, what happened is I'll be talking, then in the end only questions. What I want to do this time differently is I will go through the slides. If you guys have any questions, do free to ask the questions. Then I will stop and answer the question. Then only I'll proceed. I don't want to just I talk until the end only the questions only answer questions because I find it a bit inefficient. So I prefer that if I go through something, you guys not so clear, not so familiar, do stop me and do ask me questions. All right, there's no silly questions. All right, we all here try to learn something. I'm here to share my experience. So I've been trading in this company for almost 1.5 years. So what I do is most of the time every day I go to office, I'll open my screens, open my routers, open my systems, load my positions, look what happened in the global market and how to take on risks. All right. Market has been very volatile lately, and we have to be very careful on that also. Okay. Okay, a bit disclaimer here. Like I said, I'm here to share my view. I'm sharing my experience. So what I'm sharing here is not a buying call or selling call signals. It's just my experience. All right. And how I see the market. Everyone see the market differently. Okay, so the agenda is plan the trade. Okay. When I said plan the trade, is basically you have to know the big picture. Okay, you have to understand the market structure. Why does a stock market goes up, or why does a gold market goes up or come down? Okay, if you just purely looking at TA technical analysis, price can be quite random. All right, price can be just swing up and down for no reasons. But if you know the fundamental well and you know the structure well, at least you can pre-position yourself. Then you plan the trade. All right. So once you know the market, let's say you know the S&P 500 is going to be up. Okay. Then what you do is you need to position yourself where to buy and when to sell. But why the market goes up, I'll explain that later. Why is S&P 500 sometimes it's always on a sideway up and now we're on the downside? Why is that so? One of the tools that I use to determine the market, why is it sideway or whether it's sideway up or sideway down? I'll explain some of that later. Then with that, once you know once you have the clear picture on the market, then you can plan the trade. So you can use a different time frame to execute your orders. Okay, let me start with US stock market. I'm sure most of you here are quite familiar. All right, in US there are E-mini S&P 500, there are E-mini Nasdaq. Okay, they have E-mini Dow and E-mini Russell. Okay, all four of them behave quite differently. Okay, S&P 500 is basically the top 500 companies in US. NASDAQ is basically the companies in US, not including financial companies. Basically, companies like Goldman Sachs, JP Morgan will not be listed in NASDAQ. So it's a better benchmark for tech company, basically like Apple, Google, or NASDAQ. Dow Jones is basically the top 30 company in US. Okay. E-mini Russell 2000 is basically the SME. It's like your Malaysia with your FM70. Yep. Okay. When you want to trade S&P 500, you can go through three products. You have S&P 500, you have E-mini S&P 500, and then you have the latest product is Micro E-mini S&P 500. Okay. Three of them have different margins. So as example, S&P 500, the margin per lot is 60,000, which means that if you want to trade one lot, you need to have 60,000 in your account. The most people trade is E-mini S&P 100. E-mini S&P 100 is the most liquid futures contract in the world, if I'm not mistaken. Okay. One contract margin is around 12,000 US dollar, and micro is 10 times smaller, which is only 1,002. And I kind of like this micro E-mini. Then contract value is 250. E-mini is 50, micro is 5. Okay, tick value is 25. Okay, tick value, which means one movement is like now the S&P 500 is 3,000. If move up to 3,001, it's equal to 25 US dollar. So E-mini is 12.5 US dollar, one tick movement, and micro is 1.25 US dollar. And the trading hours in Malaysia time is basically 23 hours. So it's basically from 6 a.m. until 5 a.m. Okay, so let me switch to my screen. Okay, so I want to do something different here. Okay, so example, okay, you are given USD 10K, okay? So yeah, example, you're given 10K USD. And then the E-mini margin is USD 6K. And the micro E-mini margin is, sorry, it's 12K. It's 1.2K. Okay, so at this part, I will pause for a while and talk about a bit of risk management. Okay, this is something that's quite important before everyone should proceed and which contract to go through. Okay. Wait, 12,000. Okay. That's okay. Okay, around. Okay, sorry. Let's say you're given 20,000. All right, 20K to trade. You have to start off capital. All right. Most of the people will just go through E-mini because margin is 12,000. Okay, which means that you have 20,000. You can trade a lot of E-mini, which is correct. There's no wrong. Okay, but I think that would be quite a wrong move. All right. What I would suggest is in terms of risk management. Okay, because future is a leverage product. So one of the things that I always use in my current portfolio is I always ask myself, how much can I leverage? Okay, because most of the beginners and most of the retail, when they trade, I say that they over leverage. Right? When you over leverage, you have an issue. You tend to burn your account very fast and tend to lose money very fast, and you tend to get emotionally involved with the positions most of the time. So you have to understand what's the leverage is what I'm using most of the time. So my boss will ask me, Brendan, what's the portfolio now? How much are you leveraging? So I will tell them that, oh, currently I'm leveraging around 3 times, 4 times. So what does it mean? Why does it mean that I leverage 3 times or 4 times? Okay, let me show you an example. Let's say an example now, S&P Futures, S&P 500, okay? The futures, let's say the June price, the June now, let's say June now futures is let's split 3,000. Okay, let's split 3,000. Is it? I hope it's clear at the moment. If it's not clear, let me know. I will explain. All right, now I'll just move on for now. Okay, you can ask me questions if you guys want. Okay, so let's say S&P futures June future is 3,000 now price. Okay, so if I trade one lot of E-mini, how much am I leveraging? Okay, so example, okay, so how I do calculate is 3,000 is the price, okay? 3,000 the price with times with 50. So how do I get this 50 is basically it's a contract value, okay? It's a contract value. You see, E-mini contract value is 50. So 50, so times with 50, which means it's equivalent to 150,000, okay? So which means that if you, example, if you buy one lot of S&P 500 June futures at price 3,000, you're actually, the nominal value, we call this nominal value, right, is equal to 150,000, which means this is a full contract buy, okay? This is without leverage, this is the price of the one lot contract. So how much you're leveraging? Basically simple, you just put 150,000 divided by 20K. So basically I'm leveraging 7.5 times. Okay. So now you will know that, okay, if I trade one lot of E-mini S&P 500, okay, at 3,000 price, in my account I have 20,000. So how much am I leveraging? You're actually leveraging 7.5 times, which is in my book is very high, because normally I leverage 3 to 4 times. Because if I leverage anything more than 4 or 5 times, most probably I will not able to sleep at night with current market condition. In fact, with current market condition, I'm actually only leveraging 2 times in my portfolio. It might seem small, but this is the right risk management to do it, so I can be in long run, I can sustain, and then you can make money out of that. Because if you over leverage, let's say you leverage 7.5 times, if you let's say this portfolio you leverage 7.5 times, any movement of 5% in the equity, which is S&P 500 now, is very simple. Every night 4%, your portfolio you just wipe out, you lose most of the money. Okay, so in micro, how much are you leveraging? Micro E-mini. Okay, I see a question here. I'll try to read the question. Okay, someone asking me, may I know micro E-mini only 1.5 per tick? Is it worth trader as much as? Okay, very good question. Okay, this gentleman asked me, may I know micro E-mini only 1.5 US dollar per tick? Is it worth trading? As much as need much more to cover the brokerage fee to over this promo. Okay, your this gentleman is correct. Brokerage fee is it worth trading? I think it's worth trading, because what I'm trading now when I'm trading micro E-mini, I want to capture the downtrend or an uptrend. I don't really scalp. Okay, I hardly scalp my positions. Most of the time I hold my position for 2-3 days. So brokerage doesn't really affect me a lot. Most important is I want to be in the right trend. So I will show you one of the example trade I have done recently. Okay, I'll show you one of the reasons. After that, I'll show you one of the trade I've done. I'll show you that brokerage doesn't play a big part. Most important is you must get the right trend and execute your plan. And now is the best time to trade micro E-mini more than palm wire, if you ask me. Most of the time now, most of my positions I'm focusing on micro E-mini. I've been trading. Yeah. Okay. Final questions here. Oh. No. Now the margin is 12,000. Okay. Okay. This guy, I think now they say the margin 12,000 means the leverage is 150. No, the reason why I divide by 20,000 is because this is your portfolio. This is your portfolio. your equity. Not because I divide by 12. All right, 150,000 is nominal value, is a full contract value. 20,000 is what you have in your account. Okay, so let's say you have 15,000. Let's say you have 15,000. Let's say you have 15,000. Then you're actually leveraging 10 times. Okay, so you want to what I want to show to you is how much are you leveraging in your positions, so you do not over leverage. So at least you know how much are you leveraging. Because people when trade futures, people only care about, oh, my margin, my margin. I think this is a very wrong approach. This is what the retail do. I think it's a very wrong approach. You must know that how much you're leveraging. From how much you're leveraging, you will know how much can you take. This is my perspective. Okay. Okay, let me move on a bit first before some questions. Yeah, okay, the someone asked me is the margin you are referring to is overnight margin. Yeah, I'm talking about overnight margin. I'm just sharing what I do. Okay, I do very intraday. Okay, let me go through this micro first. Okay, let's say now the 3,000 times is 5. How do I get 5 is the contract value. Okay, so basically is 15,000. So 15,000 I will divide by my equity is 20,000. In fact, I'm only leveraging 0.5%, which is nothing. Okay. So if I have 20,000, if I have 20,000, okay, you only can trade one lot of E-mini S&P 500, E-mini S&P 500, all right, and you're leveraging 7.5 times. And then that's one thing I don't really like, because I myself, I like position trading. I like to hold position trading, so I like to have position size. So let's say I have 20,000. Each lot I trade only leverage 0.5 times, which means I can hold. Let's say most of the time I leverage 3 times. With most of the time I can easily hold 10 or 15 lots. I can easily upsize myself, size my positions to 30 lots. Then I can then I can do position trading. All right, then I can catch the full trend out of that. If you trade one lot, it's very difficult. It's because what happened to your mindset is, let's say you buy, let's say you trade one lot, you buy, the market goes up 1-to-1, you take profit, then market come down, then market break new high again. Normally, tentatively, people will tend to chase. When you tend to chase, you buy a higher price. Once you buy a higher price, market come down again, then you lose money. Then this is why I don't like to trade one lot. I like to trade at least 5 to 6 lots. It's easier for me to manage. Yeah, I see your questions here. Let me try. Oh, sorry, 0.75. Okay, thank you. Thank you for correcting me. Okay, sorry. Okay, 0.75. Sorry. All right, wrong calculation. 0.75. So I only leverage 0.75 times. Okay, thanks for correcting me. 0.75 times. So I can actually sign my position to 30 lots for me to trade, which is very good. All right. So I hope you guys understand this. So next time when you trade, you have to always ask yourself, how much are you leveraging? So when you leverage your time, so you'll feel much comfortable, because if in my books, if I leverage anytime 4 or 5 times, I think you're actually over leveraging, which I think is not right, and then you cannot position size. Like this, if 20,000, you only can trade one lot, and you're leveraging 7.5 times, this over leveraging for me. So I'm glad that SEMI launched this micro E-mini. It's smaller contract, all right. It's smaller contract, tick value is smaller, but I can position size. When I can position size, I'll show you later how to do it. I can capture the whole trend, all right. I can capture the trend. I can sleep better. In fact, I can write the trend. Yeah, I'll control my slides. Hope you guys understand this. If not, you can always come to this. Okay, so this is the main distributions between S&P 500, E-mini, and micro. Okay, this is so when SEMI launched this E-mini contract, all right, it did very well. Okay, it hit 100 million total volume since it launched in less than, I think, since June until now. In terms of liquidity, I think it's same as the E-mini. There's no problem with liquidity. I can get in and out anytime I want with this micro E-mini. So year to date now, contract performance on average you trade 310,000. Okay, in less than 3 days you trade 1 million. So in 9 months you have traded over 100 million. So in terms of liquidity, I think micro E-mini is very good. It's no issue. It's even better than FKY actually. And in fact, the margin is almost same as FKY. FKY margin now I think it's 4,005 if I'm not mistaken, and your micro E-mini is 1,002. So it's almost less than same. It's almost the same. And micro E-mini S&P 500 have more liquidity compared to FKY actually. In fact, FKY is not easy to trade also. Then the open interest. Okay, one thing when I trade a new contract, I like to see open interest. All right, I'm happy that the micro E-mini open interest and the E-mini is almost the same. We grow together. All right, this is the top one is the E-mini futures open interest, which means example is S&P 500. In fact, the micro goes hands on hand with that, which means it's a good healthy market. Every market need to have a very high open interest. If not, which means there's no one buying, no one selling. If no high open interest, which means there's no liquidity. Once you have a good open interest, which means you have good liquidity, which means the interest is there. This is a average chart, okay? And 2019, 49% is S&P is micro E-mini, S&P 500, 36% is Nasdaq. Okay. Dow Jones is around 8.7%, Russell is 5.7%. But yes, you can see that slowly micro E-mini is slowly catching up. S&P 500 is still very high, but it still have 45%, 46%. But you can see Nasdaq is catching up. Then Russell is around 5%. Dow Jones are 8%. But I think one of the reasons why Nasdaq E-mini Nasdaq 100 is catching up the volume. I think one of the reasons is because the tech company like Apple's Facebook share is getting more and more expensive. It's getting ridiculously expensive. In fact, you can trade this. You can trade micro E-mini Nasdaq, same as like trading Apple shares. Give an example. Okay, the red color is Apple share price. The black color is your Nasdaq price, your micro E-mini Nasdaq price. Okay, you can see that both of them are moving in tandem. It's the same, correct? It's the same. From this picture, you can see that it's not so clear. Okay, I can put it to this picture. Okay, from the chart, you can see that the Apple share price is 254.81 US dollar. Okay, so let's say you buy 1,000 lot. Oh, sorry for my typo. So imagine you buy 1,000 lots. Okay, which is very normal. 1,000 lots is 10 shares. You times with 254.181. In fact, you need to pay 200 USD. 254 US dollar. Yeah. So let's say you want to buy 1,000 lot of Apple shares, you need to pay 254,000 US dollar, which is very high. Okay, but if you see from the chart just now, both of them are moving in tandem, both of them moving the same. So let's say that you can't really afford to buy Apple shares, but you want to capture the share movement. I think you can trade Nasdaq. Okay, because Nasdaq micro E-mini Nasdaq margin, I think is 1,005 if I'm not mistaken at this moment. Okay, with 1,005, you can actually trade. You can actually like buying Apple shares. So what's the nominal value for this Nasdaq? Nasdaq price now is, let's say, 7,912 price. Nasdaq price. Okay, let's say the price. Nasdaq price now is 7,912.5. This two is the micro contract. Micro. Oh, sorry for that. Nasdaq. This is micro Nasdaq contract value. Okay. So in fact, if you buy one lot of micro mini Nasdaq, the contract value is actually only nominal value. I'm talking about this nominal level 825. So let's say you buy one lot of micro mini Nasdaq. In fact, you achieve the full contract nominal value is only 15,000, which is much lesser compared to you buy one lot. So I think this maybe just explain why people trading Nasdaq. Trading Nasdaq and Nasdaq volume is going up. I think it's because the share price of Apple, Google is getting more expensive, so people want to capture this, okay, to manage the portfolio, the hedge portfolio, so they trade at micro because both of them moving in tandem. So if Apple is doing well, Nasdaq should do well also. Like now, Apple not doing well, I'm sure Nasdaq is coming down also. Hope you guys understand this. Any questions? Okay, solve questions here. How many lots of micro E-mini should we buy? This depends on you lah, how much equity you have lah. But like I show you just now is you must know how much are you leveraging. Then from there you can manage yourself. Okay, I'll be focusing more on micro E-mini S&P 500 because this is what I trade. All right, then this is what the position I have right now also. Okay. So a short brief introduction. Oh wait, I mean per example just now. Okay. Let me go back. Okay, I saw questions. I will try to go back and answer. Okay. So let me go back to this. So let's say you have 20,000. Okay. So you have 20,000. One contract if E-mini S&P 500 is 15,000. So divided by your portfolio is you actually leverage by trading one lot, you're actually leveraging 0.75. So how much should you trade? It depends how much you want to leverage. I would say you should leverage around 3 times. So if you leverage around 3 times, you can actually trade around. Let's say you leverage 3 times. Let's say you leverage 3 times. Okay. So with that, which means you should trade around 4 lots. All right. 4 lots. And then 4 lots will be say 3 times. So any swing of 5-6% a day, you can take the hit. You can take the hit. Okay, what's the difference between Nasdaq Micro E-mini and Nasdaq CFD? Okay, I like these questions. Okay, I personally never like CFD. Okay, because I always think CFD is very disadvantaged to the traders. I always prefer to trade Micro E-mini because Micro E-mini is through exchange. When you through exchange, the buyer and seller is real. When the buyer and seller is real, everything is fair. Everything is fair. All right, what you see is real. You see the buyer is real. The price is real. In CFD, things can be quite difficult because there are market maker behind CFD. Okay, so sometimes I'll give you an example. My friend experienced this. Example, you put a stop for S&P 500 at 3,000. You put a stop at 3,000. In the real S&P 500 might not hit the 3,000, might not trigger it, but the CFD might trigger it because CFD is a market maker behind that. So if you ask me, I think I prefer micro E-mini because the brokerage, first of all, brokerage is there. All right, if you carry overnight, they won't charge you anything. I think CFD they do charge you for carrying overnight. I think okay, so I prefer to trade micro. It's much more transparent, and the buyer and seller is more genuine. Okay, let me go through this micro E-mini S&P 500. Okay, so I think you guys know micro E-mini S500 is basically the top 500 companies in US. So it's the best way to gauge a US stock market. Okay, involve companies, Goldman Sachs, Apple, Amazon, which means companies in Dow Jones and Nasdaq are all also listed in that. So let me just go through a bit. This orange line is basically Apple shares. Okay, this black color line is basically S&P 500. This blue line is basically Goldman Sachs. As you can see, all of them are moving in tandem. So basically if the share price is doing very well, basically S&P 500 will go up also. But right, it should be the same because S&P 500 underlying is shares, which is like S&P 500 first. Okay, so one of the things, how do I determine the market is up or down? Sorry, I would say inflation. When I do, I always go down to inflation. In any economy in Malaysia or US, I think especially in US, everything you need to do, you need to look to inflation. I think this is the most important. This is the thing that most of them we overlook. Okay, because when a country have good inflation, the share price will keep go up and up and up. All right, US have been having good inflation for the past 2-3 years. That's why the share price of US keep going up, going up, going up. But how do you have good inflation? I will explain that later. And another point out is the opposite of inflation is deflation. Okay, deflation, which means the price keep coming down. So I will always point out this is which country have deflation before. The country have deflation before is Japan. Okay, so that's why you will see that Nikkei 225 for the past 10 years, they always sideways down. All around the world, you like stock market during the time, every stock market is, okay, don't say 97, 98, okay. All the stock market in the world is always going up, going up, going up. But why Japan stock market always come down? Why? Because the country have a deflation. Okay. If not, you buy, I'm sure you guys buy unit trust, right? When you buy unit trust, you will see that Asia Pacific X Japan, or there's always like, or invest in Asia Pacific X Japan, or invest in the world X Japan. Why? Because Japan had deflation. When Japan deflation, the unit fund manager cannot buy the shares. Not say cannot buy the shares, but if buy the shares, most likely will come down. But around the world, we have good inflation. That's why the price keep going up and going up. But because our country have deflation, the market is sideways down. Okay. So for me, it's very simple. If the country have good inflation in the next few quarters, which means the market is always sideways up. When the market is sideways up, for me, it's any dip is good to buy. It's opportunity for me. So how do we know the inflation? There's questions you have to ask. Any questions so far? So for me, it's very simple. When I trade US stock market, if a country have good inflation, it's sideways up. If a country have deflation like Japan, Nikkei 225, it's always sideways down. So this is how I differentiate. This is how I get the bigger picture of a stock market. So in US, how do you know inflation is one of the way you can get it is it's called consumer price index. Basically, is price associated with cost of living. It's how the CPI is used to identify period of inflation and deflation. In US, the inflation ideal rate is between 1.5 to 2.5. In 2020, it's supposed to be 1.9, which I don't think will happen now. All right, and in 2021, I expect to rise 2%, which I don't think will happen also. Okay, so let me give you an example. In the early 2005, okay, in the first few months of 2005, US did experience a slight deflation, which means that inflation is not so good compared to previous months. What will happen to the stock market? You will see that because of the early years, it doesn't have good inflation because it report towards the end of the time. You will see that in 2005, period set 2004 market, you will see US stock market will keep going up and up and up and up. But for some reason in 2005, you will see the stock market in US, S&P, this is S&P 500 chart, you will see it doesn't go new high. It's always sideways down, always up, come down, always up, come down. So once you know this country that most US is going through a slight deflation, means slight inflation, means it's not good, not having good inflation, which means the stock market should not go up anymore, it should be sideways down. This is my personal point of view, and this is what I think is my belief when I trade the US stock market. So this is my view. Okay, I might be wrong, but I think I'm right also for this while. So once a country has a slight inflation, you see this like that. It can go up. All right. After in 2016, US have start inflation, good inflation back. You will see the stock market can go back up again from the side. Okay. Hope you guys understand this. This is one of the way I get the bigger picture. This is how I plan the trades. Once I know the country have good inflation, deflation, then I start to plan what should I do with that. So when in consumer price index, okay, you can go to this tradingeconomist.com/US slot inflation. Just Google, I'm sure you can get it. So you will see that they will have announcement every month. It's almost on 10th, all right. So it's around 12:30 GMT time. So March 1 will be, in fact, they already announced. March already announced. It's good because they always compare to the previous month. They always compare to the previous month. Like this is March 1. This is when they report on the March, they report on February's month. Okay, February is still good. But April, they're going to report on the March one. So the March one, I think is a bit, I don't think it's that good, I personally think, because the forecast should be around 1.3%, 1.7%, because a lot of country, a lot of state in US now is having lockdown also. So I don't think it's that good. So I think on the 4th of 10, I think they have some movement. 4th of 10 will be on next Friday. Yeah, I think once I announce this, I think there's a big move in the market. So something to watch out. So far the market expectation is around 1.7%, which I don't think so. Sorry. Someone asked me, do you think Malaysia is having deflation soon? I think we're going through the periods already. I think since last year we are into the deflation period already in Malaysia. I think so. I don't have the statistics behind that because it's not so transparent, but I think we have, because the problem with Malaysia, my personal point of view is because government are spending money. Government are spending money. When the previous government took over BN, they've been like cutting. They're not spending money. So when a country doesn't spend, which means you have no projects, no nothing, things are slow. When things are slow, then you might have a slight deflation. Then when there's no growth and there's no inflation, stock market should not go high. I mean, that's my view on Malaysian market. Especially of crude oil, it's not so good also. Okay, so how inflation will be good or bad? I think for me, one of the way to determine is FOMC. I think you guys know what FOMC is, basically Fed, all right, Federal Reserve. So once a year, there's 8 times announcement by Fed what they want to do. Okay, this will result in once they determine what they do, basically they will buy or sell US Treasury bonds in the open market to promote. Okay. The current rate is 0.25, which is very low, which is very scary. I don't think we should go to negative interest rate. I don't think it's good for anyone. But I think they were heading towards there. Okay, so this is what you can see in 2020. The next announcement we have is going to be April on 2029. We have on the March. The March one is quite surprisingly because they reduce the interest rate. So we have one going to be end of the month, then we have June, we have July, we have September, October, December. So you can go to this Federal Reserve, you can get the date. I think this date is very important. When it comes to closer to this date, I always tend to be more alert towards the market because I tend to be more sensitive. So why is it Fed is very important because they will influence the interest rate. Once you influence the interest rate, you will influence the inflation. Why would I say so? Let me see that is okay. Let me go through. Okay, let me go. Okay, give me an example. I'll give you an example. Example current situation. All right, Fed interest rate. I'll put short form. Interest rate is from 1.25 to 0.25. Basically, what Fed will try to do is basically when Fed want to do this is basically what they want to do is they try to promote they try to promote inflation actually. So what they want to do is basically if once you lower down the interest rate, all right, Fed will once Fed said that okay, I will lower the interest rate, Fed will buy bonds. He will buy the bonds in open market. Basically buy bonds with Goldman Sachs everything. When he buy bonds in open market, basically he gives money. Because he give money to the companies, to let's say investment banks. Okay. So when bond price up, interest rate down. So this is how they do it. Okay. So basically when they buy When Fed buy at open market, they buy the buy. When they buy, the bond price goes up. When the buy goes up, interest rate goes down. This is how they influence the interest rate from 1.25 to 0.25. So when they give money to investment bank have the money. They will borrow the money out to the public. Okay, now it's like I have extra cash in my company. Okay, I only can have reserve, like, because in US I think the bank's reserve ratio is around 20%, if I'm not mistaken. In fact, they low down 10%, I think. So if the reserve ratio is 20%, which means they have extra cash. Once they have extra cash, they need to borrow out. So when you borrow out, when you lend the money out, when you lend the money out, SME will borrow, will get money. So when SME get money, they will get money, they will spend. So when they spend, basically they will hire people, more projects. So when we have more projects, we have people have money in the pocket. When people have money in the pocket, people will tend to spend. When they tend to spend, hence inflation up. Okay, this is what they try to do. This is what the Fed try to do. Basically, this is how they do it. How to do it. Okay. Where to get intraday data for micro E-mini example. This one you have to. Someone asking me where to get intraday data for micro E-mini example. I think for me, I'm a bit play rich because I have routers. What you can get, I think you can go to investing.com or you can ask your broker. I'm sure they can help you how to get one. I think Nova, yeah, because I'm using Phillip also. I think Nova have charts, they have 1 minute charts. Yeah, I think Nova. You can. I think if you account with Philips, you can go to Nova. When you go to Nova, I think they have 1 minute charts there. Yeah, I think they have it. Yeah. Okay. So I'll give you an example. Right, in 2008, okay, as we know, we have inflation, we have financial crisis. In US, the GDP is 0.1, unemployment is 6, inflation is 0.1. Okay, so we can see that Fed, what they do is they try to reduce the interest rate from 3.5 to 0.25. Basically, they want to promote this guy, to push this guy up, reduce this guy, push this thing up. This is what Fed do. Fed always look to these three things only. So in 2008, they reduced the interest rate from 3.5 to 0.25. So for a few years, they maintained there. In 2005, the interest rate, the GDP is 2.9, the unemployment is 6, inflation is better now compared to 0 point here and this one. So the interest rate was 0.25. Once these two start to show decline, you can see that the Fed increased by the interest rate. And in 2006, inflation is 2.1, which is healthy. Inflation in US, they always want to get around 1.5 to 2.5. It's 2.1, unemployment is 4.6, GDP is 1.6. So they increase by the interest rate. So this is what they do. Basically, they want to play around, basically try to promote this, and basically they want to push this three thing and play around the interest rate. So we have a good interest rate. We keep going up the interest rate until now. So in 2020, because of coronavirus, they straight to reduce interest rate from 1.5 to 2.5, because once the coronavirus, they expect to have a lower inflation rate and they expect to have higher unemployment rate, which is going to happen soon. That's why this is what the Fed trying to do. Okay. So this is how I see the structure for the stock market, the US stock index. So basically, if you understand what the Fed want to do, right, how they manipulate the interest rate, you actually will be one step ahead compare. So you know what should you do, what you want to do, what you need to do. So once you know inflation very well, you should know market sideways up or sideways down. Gold. Okay. Gold, I do trade gold, but I don't trade all the time. When I trade gold, I basically most of the time I think I only trade gold like once a year or twice a year. That's all I need. But basically just for my portfolio management and to hedge my risk. Okay. The way I trade gold is slightly different compared to most of people, because most people think that, oh, when things happen now, financial crisis, people think that financial crisis happen, you should buy gold. I don't really agree. I personally feel that I don't really agree on this, because when things get bad, cash is king. People will sell everything. They will sell gold also. But I see gold, the way I trade gold is slightly different. I will share how I look at gold. Okay, let me go through slight differences. Okay, in CME they do offer two types of gold. In fact, they have three. They have gold, E-mini, and micro. But I took away the E-mini because there's no liquidity in E-mini for some reason. So they have COMEX gold. COMEX gold is a big one, all right. And then they have micro gold. So for the micro gold, it's only 135,000, which is, I think, it's very fair. It's a nice product like this. So the nominal value is around 48,500. It's almost same as one lot of micro. Then contract value is 10, but tick is $1. Trading time is 6 to 5. I think COMEX gold is, I think it's too huge, because to trade one lot of COMEX gold, your nominal value is $145, which means it's around $500,000 ringgit to trade one lot of. For me, if I trade one lot of COMEX gold, I need $500,000 ringgit in my account. So, which is quite a lot. I don't think I'll do that. So I'll prefer to trade my micro gold, which is smaller. It's easy to manage my risk. So how do I trade gold? I trade gold is, I also look into one thing only. Into a few things. One thing I look to is basically interest rate. Okay. Because most of the time people trade gold is, oh, when things happen, I buy gold. Oh, when financial crisis happen, I go chase to buy gold. When there's war, I go buy gold. I think this is a very how to say, I'm not saying old school. It's very nothing special. Nothing special. You're not one step ahead compared to other people, because you're just playing the news. You're just playing the rumors. Oh, things happen, I buy gold. But there are actually a right way. I mean, the right way I trade gold is basically I look at US Treasury bonds 10 years. Okay. For some reason, okay, I mean, the black color is gold price. If you can see, it's gold price. Okay, the blue color line is the US Treasury interest rate. For some reason, it's very funny. You see, whenever time the 10 years Treasury bonds interest rate come down, you will see that gold price goes up. You see, if you get what I mean, yeah. So you see the same reasoning here. Yeah, let me move the screen a bit. It's blocking. So you see reasoning here. You see, when Fed lower down the interest rate, you see when Fed lower down the interest rate, what happened to gold price? It did spike up. It did spike up, especially when it started to sun. So if, example, let's go back to 2016 here. Okay. In 2016 time, in 2016, everything started to recover already. Interest rate is very low, all right. And then in 2007, you see that everything is start to recover, means everything is back to normal already. People say, oh, everything start to recover. Then when everything start to recover, you know that Fed should increase interest rate, because they cannot win. When they lower the interest rate is to help to boost the economy. When the economy is doing better, they should increase back the interest rate. All right. So if you know that in coming months, Fed is going to increase the interest rate. Okay, in 2006 it's going to interest rate. You will see the gold price will be on a sideways. They can't do much. Say in 2018, in 2018, suddenly in 2018 you see that suddenly Fed stopped to raise interest rate. Okay, it stopped to raise interest rate. In fact, they might want to reduce interest rate. In fact, it happened in 2019. They reduced interest rate. You will see gold price. You see they want to reduce rate. You see the gold price goes up. So this is how I trade gold. So if I know in next few months what the Fed want to do with the interest rate, I will start to position myself. Okay, can I now Fed want to lower the interest rate? Okay, so I should buy gold now. So I should buy gold. I slowly position myself and looking at daily chart, everything, how I position myself to buy gold. This is one of the way I trade gold. If I know what the Fed is going to do, if I can, in a way, guess. We have a questions here. Recently, back, German announced 50% lowest in history. Okay. Yeah, I'll answer that later. Okay, because of interest rate, okay, it will affect inflation. Okay, I just said interest rate will affect inflation. So when I trade gold, I also like inflation. Inflation is very important to trade gold. Okay, because gold is known to be inflation hedging. People use gold to hedge inflation. Basically, I think this is the right way to do it. Let me show you an example here. Okay, this is the average inflation rate versus annual average gold price. You can see that if inflation goes up, for some reason, gold price do go up. If you see inflation come down, you will see. If you see inflation do go down in the next few years, for some reason you see gold price come down. So this is how I position myself in my when I hold a portfolio in my gold. Normally when I buy gold, I sell gold, I just buy and hold for a few days or weeks when I want to hedge against my inflation when I do this. So asking me, is interest rate only criteria that influence gold price? Any other factors? Okay, basically you have, for me, I've only have interest rate, inflation, and US dollar. All right, it's either people hold cash or hold gold. All right, but I normally when I trade gold, I just look at interest rate most. Okay, like now I know that interest is 0.25. I'm not sure will Fed reduce anymore, but if I know Fed will start to increase back the interest rate from 0.25 to 1% or 2%, I will start position myself to sell gold. Any new high on the gold price, I will be tempted to sell. So asking me a question, how does deflation affect gold price? I think if deflation comes in, I think gold price will be very supportive. So asking me how deflation affect gold price. I think if deflation comes in, if we have zero interest rate or we have deflation, I think gold price will be supportive. But will it go very high? I'm not too sure, but I would prefer to buy the dip, okay? But I also prefer to sell at the high also. Because when things collapse, everything will collapse. It doesn't matter if go or not go. Okay, so I hope I can give you a view on how do you see stock indexes and gold price. So next I will talk about trade the plan. Okay. So when I trade the plan, you see the funny thing is when I first started trading in time, I always see the value of money is very important. Every time I see like 5,000 or 10,000 losses, I would get panic. I was like, oh, freak out. I was like, oh, this is bad. But now I don't see the value of money is so important. It's basically I follow my plan is much important. Basically, I'm trying to say is if you leverage properly, you don't over leverage, you leverage properly, any movement in your equity will not have a huge impact. It's because people tend to over leverage. When you over leverage, any small equity movement, 3-4% equity, you will get panic. When you get panic, you will do silly mistake. You will have revenge trade. You will try to buy here, sell there. You will turn here, turn there. So leverage properly in the first place. So I always think that it's not about your gut feeling. It's about following the system that you have planned and disciplined about it. Okay, but yeah, this thing I want to share. So okay, because professional traders, for me, I always miss some trade. Okay, professional trader miss move and look for the next one. Problem is a lot of people is they try to chase every trades. They try to chase every trade. All right, which means I think it's wrong mentality lah. Because most believe this is right. Is it? Most of the trading involve waiting. Okay, the person who chase for rabbit catches none. So there are times you need to be patient when the two have the right move. And yeah, let me show you why I say that. Okay, let me show you one of my favorite tools. Okay, this is commitment of trade. I'm not sure anyone use commitment of trade here. When you trade US market, when you trade CME, one thing you should always have is commitment of trade. Commitment of trade is basically the reports. Okay, how commitment trade is basically on every Tuesday, CME, the exchange will collect the data from all the brokers, maybe from Phillips, from JP Morgan, from Goldman Sachs, all the reports saying that, okay, what's the positions? So on Tuesday, they collect all the data because when you open an account, you take that, are you a institutional or are you retail? So once you collect the data, on Friday, they release who is buying and who is selling. So I use this quite a lot. One of my last time, when I always Saturday, first thing in the morning, I will go through this commitment trade of all the commodities. I will know who's buying, who's selling. What I do look to, I just look at the extreme point. Extreme here and extreme here. So this is one of the confirmed trade. Okay, this is very recent. Let me go to the different side. Yeah, okay. Okay, so this is the most recent confirmed trade of S&P 500, basically. Okay, as you can see, okay, the blue line, the blue line is basically asset manager. Asset manager is basically like your pension fund, your endowment fund, your endowment fund, your KWSP, your hedge funds, okay. Then the black line is basically your swap dealers. Swap dealers is basically investment banks, bankers, swap dealers, or basically take opposition to open positions, all right. The green line is basically the leverage money. Leverage money, we have family office, pot trading. But most important is always look at the blue line. Always look at the blue line. So let's before this, okay. This is July, okay, go further here. Okay, this is beginning of 2020, okay, because I did bought some here and then I get out already, okay. If you can see from here, right, this is for past 10, this from 2014 until 2020 here. You can see that in this period, right, the asset manager, they're actually buying S&P 500. This basically here is trying to say is, as the asset manager is basically long S&P 500, and they are at the highest for the past I would say 5 years. All right, their most long positions at here. All right, I think this one is during January. This is during February time. So I do go through this course, and during January time, I already know that they keep telling me that the asset manager are pretty long in S&P 500. They are at an all-time high long at S&P 500. So any small dips or any small bad news or small announcements, this thing can just fall like that, because when they buy so much already, if anything happen, they will risk off. When they risk off, they will sell off the positions. So fortunate enough, because what happened was we have coronavirus, and in fact we have coronavirus. When first hitting coronavirus, then this is where I start selling actually, because before this I already know that asset manager are pretty long, so I'm just looking to sell. I don't want to buy already, because at this period already, right, they're pretty long already, right? How much would they buy? How much would they add on to the risk to buy? I don't think they will add more risk to long already, because they're pretty long for the last 5 years. So if any small thing happens, so they basically will risk off. So this is what I try to look into, and because of this coronavirus, I did short a bit of micro S&P 500. I have questions here. You mentioned that you hold gold for a few days, but normally Fed announces new rates price. Okay, the question is, you mentioned that you hold gold for a few days, but normally Fed announce new rate, gold price or US will fluctuate. How sure are you to catch your supportive? Okay, normally I hold gold for a few days, but I don't really trade when the Fed start announce. I will trade when the Fed announce already, let the market settle on going positions. Let's say, like example now, we have 0.25 interest rate now. Okay, if Fed suddenly increase the interest rate to 0.5, or increase the interest rate to 0.5 or 0.75, increase back to 0.75, which means I know the interest rate should be going higher and higher, because they see the market stable already, and they see the market stable, they see the reason why they increase interest rate, which means moving forward in the next few months, they might want to increase back the interest rate. They don't suddenly reduce back. With that, I know the interest rate is going higher, then I will start to position myself to sell the gold and look for opportunity to sell the gold. That's why I will wait for the right moment, the market to go up to the point that I think it's comfortable for me to sell. I will sell. I will not trade when the Fed announce a trade, because it's not my style. I have to manage the portfolio. I will just go in and I will just wait for it. Okay, let me go to my slide. Hope I answer questions. Okay, so as you can see, the asset management is pretty long. Okay. So what happened is, on January, I already know that asset management are pretty long. Okay, then start to on January 22nd, you see that suddenly, because of coronavirus, the death run out to 450 billion get affected. Then they've already start quarantine them, and then the WHO on January 30th, they start to like declare global emergency, then I know that this will have a big impact on S&P 500. First thing is because I know the asset management are pretty long, and then with this, I'm sure things will slow down. Okay, and then on 20th of February, then South Korea the first death of coronavirus. Then on 21st, then 21st February, they have second death. On February 22nd, they have like new cases highest. So what happened was during this time I was actually when this first 21st January is around here actually. In fact, I did short a bit here because we have a, if you know technical, if you know technical, you know that this is like a shooting star at the top there. Okay, so it's very good signal for me. So I already know the guy, then I already know the asset management are pretty long, then I have a shooting star on the top, which means that might be a risk off. So in fact actually I did short here. Okay, I did short here around here, come down. I did, yeah, I can tell you the exact amount of short, but let's say I short around 20 lots at this price. Okay, so when it comes to 1-to-1, I will take 1/3 of it. So when I take 1-to-1 of it, then I'll let the 2/3 of it to run. So I did let it run for a while, but I didn't manage to catch up this because I was hoping to come down. But in fact, the market rebound here, I did stop out a bit, stop out half of my positions. I left half here. In fact, after that, I still remain my cut loss because I let it to run all the way. But in fact, I stopped loss here. Then the biggest giveaway is when this market go up, when this chart go up, right, this bar goes up. Because it's touching my moving average, it goes up again. Then I was thinking, why they're still longing back? Why the guys are still buying when we have still this COVID-19? But why they still buy? Because after that, I just realized that during this period, this February period, is earnings report. If you know, if you trade US market, you will know that in US market, stock market, we have earnings report. So we have mid of January until mid of February, we have earnings report. April with earnings report. I think June, July with earnings report, and September with earnings report. So during this period, all the earnings report in the US market, for share market, Apple, Goldman Sachs, all is very good, and the share price is going up. And then this is the reason why, even though you have coronavirus, but during the time, the S&P 500 still go up. Let me check the questions here. Can you recap again when do trade go? Okay, I'll go back. I will recap later once I finish this. So basically, I did short around here. Let me go to it. I did okay. Oh, this is a better one. I forgot about it. I did short around here because this is the shooting star. I did short around here. Then I took some here, but I netted all because I was hoping to go all the way down, but it did go up again. That's where I cut loss also. You just imagine if I trade E-mini S&P 500, I only can trade 2 lots. I cannot manage my position. So if I short 1 lot, take 1, then I will not be able to maximize the whole thing. Because I was able to trade micro, I can go in more. I can go in by 20-30 lots. So when I go by 20-30 lots, I can take 10 lots out or take 5 lots out first. Then I left the remaining, let it run. So I have a better risk reward out of that also. Okay. So when I start after that, I still look at the commitment trade. Commitment trade is the guys are still pretty long. I was wondering why, because of the earnings report is good. But then there's a report come out saying that this on the 18th of February, there's a report saying that Apple expect to miss revenue due to China coronavirus, and this is where the market start moving again. Because of that, on 18th of February here, there's a big one. This when the Apple start to say that I think the coming forward of earnings report, they will miss it, and then this is where I start to short it again. And I, fortunate enough, and thanks for the market being kind to me, I did manage to capture quite a bit out of this one. Okay, the reason why I'm able to do it is because I told you I look at commitment trade, and then because of this COVID-19 again, I did manage to capture out of that, and because I did quite a bit on the micro. If I will be trading E-mini, I think I only trade a few lots only, which is not justifiable. So asking me, what are the settings you use for moving average? Basically, this is what you see. I only use 10, 50, 100. That's all. AMA. That's all. This is all the moving average. I can see it's very standard. This all thing. This market pattern is very important. It's for the candlestick is very important. You have to know what's double top, what's double top, hand shoulder, and what is candlestick, what is shooting star. I like shooting star a lot. This one pattern a lot. When this thing kind of like this, like you have shooting star like that, all right, I pay quite a lot of attention to it. I was wondering why you shooting star, especially at the high. This is where I will go to investigate and understand more. Like this kind of thing, shooting star. I'll try it out because the risk reward ratio is very good. All right, this may sound simple, and I think everyone knows about it, but yeah, this is one of the things I use most of the time. Okay. Okay, let me go back to the gold price. Gold. Okay. So back to the question, people ask me, how do I trade gold? Basically, is if I know the interest rate is going to reduce, okay? If I know the interest rate is going to reduce, let's say example here, okay? If I know the Fed is going to roll down the interest rate, okay? Because you see, people always make a question, if I know that Fed is going to roll down the interest rate, which means I know the gold price will be supportive with me, which means I will look for buy signal. I will not look for sell signal anymore. I will look at technical, I will look at chart. I'll just look for buy signal. Any small dip, I will tend to buy and I hold a position out of that. If I know the Fed is going to increase back the interest rate, I will not buy anymore. I will look for sell signal. When I look for sell signal, which means I'll wait for it to go higher or retrace, then I do sell. I'll maybe look to combine trade, looking at the guys either buying or just selling. So like now, once you know the Fed is going to lower down, when you know the Fed is keep lowering down interest rate, you'll see gold price very supportive. This is how I see it. This is how I trade it. Basically, I use this quite a lot to understand more. I hope I answer your questions. Okay, so one thing I use combined trade. You can go to trading stars. All right, basically I think everyone should use this. You just go to trading stars. Okay, basically it's free. Basically, the best thing is free. Everyone can use it. So what happens is the trading start is free. So I will just go to S&P 500. I just click S&P 500 combined trade. Sorry, internet a bit slow. Okay, and then you will see the asset manager who's buying, who's selling. So you can just drag as many as you want. Then you see that. You see at the end of 2019, you see the guys, the funds, the endowment funds are pretty long. They're the longest period for the past 6 years already. Okay, so you know that any small thing, right, they will just sell off. In fact, they do. In fact, now they're not really buying anymore. So I'll wait for them to go down a bit lower. Then I will start to use this as a tool for me to want to buy into the market. Currently, any high I'll just sell. So one of the things I always use is candlestick patterns. All right. So for me, it sounds simple, but I think this is the thing I use it very often. I use shooting star. I always look for this kind of pattern. Shooting star, hanging man, hammer, inverted hammers. I like this one a lot. Twisted top, all right, twisted bottom. Make a lot of sense. I look at higher high, lower low. This one in the charts. Basically for me is once I know the market pattern, I will look. Let's say I know the market is going up, so I look for higher high, higher low to trade. So the only last advice I can give is basically market is always there. When I pass away, I'm sure S&P 500 still trade, so CPO still trade, people still trade the market. So this market is always there, so you just have to be patient about it. Okay, if you don't have the right mindset, the same market is very fair. Okay, stock market, I mean, in trading is very fair. If you're good enough, you can just go and take money from there. But if you don't have the right mindset, market will just take the money. One thing I always believe is you do not trade the market, it's trade your belief about the market. So what I share, what I share with you guys now is this is what I believe in the market. This is how I see the market. How this is my belief towards the market, and it's been working. So once I believe in the market, so I trade according to my belief in the market. Okay. So which futures contract? Someone asking me what futures contract to choose to trade. Basically, you just choose the highest volume most of the time. Most of the time, I just choose the higher volume. I just go over if I have to hold a bit more. Okay, so I think that's pretty much for my sessions. I have my email at here. If any guys, you can ask me, you can drop me an email. I'll try to reply. Yeah, if there's any questions, do let me know. So James, I will switch back the presenter to you.
All right. Thank you, Brandon. Okay. Since we still have a little bit of time, then I might ask some questions from the audience. Hold on. Okay, Mr. Brandon, the questions for you is that just now you mentioned about that your whole goal for a few days, but normally when Fed announce new rate, so the gold price or USD will fluctuate. So how do you can ensure that cash near support before or after Fed the announcement?
Yeah, basically, normally I will just wait for them to announce first. So after once I announce it, let things settle, only I start to position myself. I try not to trade during the announcement time because it tends to be a bit misleading. Okay, because nowadays, right? Example, I give you an example now. I think last week, if you were trade S&P 500, right, they reported that the jobs claim rate is the highest for the past how many years. But what happened to the market? The market just go up only. It doesn't come down. So most of the time is when they announce already, they already priced in with you. So I prefer to stay away. Okay, like just now the jobs came when jobs came come out, the market shoot all the way up to almost 5%, but the next time market come down. So for me, I prefer to let it run first, then the next time I start to position myself. I normally I try not to trade during the time. Okay.
Okay, thank you, Mr. Brandon. All right, I think just now Mr. Brandon had replied most of the questions. Okay, so we'll call it a day. But before that, this webinar will be uploaded to our YouTube channel by this week. So the audience who missed some part of this webinar may go to our YouTube channel, subscribe our YouTube channels, and have a good day. All right, then this will be our contact details for social media and each of the branches included our HQ. Okay, yeah, I perhaps you can take a picture of it. You can go to our website and search. Yeah. All right. So thank you, Mr. Brandon, again. Okay. Thank you
Thank
for
you.
giving us very informative, very detailed seminars and sharing about the micro products. Okay. Yeah. So thank you for joining our Phillip Futures webinar. So wish you have a good weekend, good night. Thank you.
All right. Thank you. Stay safe,
Bye
everyone.
bye, Brandon. Thank you.
Thank you.
Hmm.